Question 4 then, we've got a nice little VAT question which is broken into some nice little bits. So you may not be happy with all of the question, but you can see there's some small bits here which might enable you to pick up some of the 10 marks if this isn't really your main area. So the requirements are, first of all, explain when a business must compulsory register for VAT, explaining the 2 separate tests. So you don't expect a lot of detail, it's only 3 marks, but we need to say what the rules are and basically how the 2 tests work. Then we want to look at the numbers and say which month this company meets the conditions of one of the tests. And then state the date when the company must notify the HMRC that they're going to register and when it will be effective from. And then finally, a little bit of theory, what situations a business may recover input tax on purchases prior to the registration date. So A and D are pure theory, B and C are more application, but you could get 6 out of the 10 marks just knowing what your VAT rules are. All right, let's have a little look at what we could put there then. So starting with part A, then this is purely theory. So explain when we must compulsory register for VAT. So if you look at your rates table, you'll see this is actually written on there. So all you've got to do is know that's where to look. The registration limit is 85,000. Okay, now what does that mean? It's a registration limit for taxable supplies. And a taxable supply is when you've got 0 or sales, so 0 rated sales or sales at a tax rate. So for example, in the UK, we have sales tax at 20% normally, but we do also have things like fuel that might be at lower rates. So anything where tax is being charged, whether it be 0% or at a particular rate, like 5, 8, 20, whatever, that will be classed as a taxable supply. So if you add all those sales together, if it hits the registration limit, then we're talking about registration. Now it wants you to talk about these 2 tests. So there are 2 tests that you can use against this limit. Test number 1 is called the future test. And the future test is when you expect to exceed the limit of 85,000 in the next 30 days. So you're looking ahead and saying, in the next 30 days, I know I'm going to go above that limit. So this could be, for example, a new business who gets a big contract and they know straight away in the first month of trading, their sales are going to be above 85,000. So that situation, they'd be required to register straight away. The other test, which is the more common one that you see, is the historical test. And this is when the taxable supplies for the last 12 months, and that's on a continuing testing basis. So it could be shorter if you've just started trading, but normally, you know, the last 12 months of normal trading business exceeds the 85,000. So if your business has only got small sales to start with, it's obviously not going to meet the future test, but you gradually keep testing it to see whether for a 12-month period it exceeds 85,000. So basically 1 mark for knowing each of those. Now what it wants us to do is apply that to what's going on in this business. So the business commences trade on the 1st of November. So here are our results here. So November, December, January, February, March, etc. So let's count 12 months. So November, so it's going to go to October, isn't it? Yeah. So that's a 12-month period. Okay, so November 17 to October 18, we add that all together, you'll find it only comes to 74,000. So they don't reach the 85,000 limit in the first 12 months. Now, what you would then be expected to do is to continually test. So when we then look at the next period, we would get rid of the old November and replace it with a new November. So for example, we would, where can I write it? So December 17 to November 18. Okay, we could take that 74,000 that we got for the previous 12 months, take off the old November and replace it with a new November. And that gives me a figure of 80,500. So it's still not in the limit. So we do it again. We then go 1 month further. So January 18 to December 18. So we take the 80,500 that we had before, get rid of the old month. So we get rid of the old December, 4,100, replace it with a new December, which is 8,700. Now at that point, we just go over the limit. So if I just rub this out for a second, basically the point when for a 12-month period, you are going to hit the limit of 85,000. It starts in January 18 all the way through to December 18, and you hit the limit of 80,100. So there's a lot of working to do there, but basically they meet the conditions, so they hit the limit of 85,000 in December 18 with that figure there. Part C then, identify when we should notify the company. So if you're using this future test where you're looking at this 12-month period, you have got 30 days to notify them. So 30 days to notify. So if I'm going to hit the limit in December 18, I need to tell them by the 30th of January 19. When will it be effective from? Well, it's the next month. So if I tell them by the 30th of January, it's effective from the 1st of February. So it always starts from the next month, right? So it never starts from in the middle of the month. So whenever you notify them, it's the first day of the month following notification. And the last part then, a little bit of theory, briefly explain the circumstances when a business can recover input tax on purchases prior to registration. So normally you can only recover your purchases tax if you're registered, but there are situations when you can recover it prior to registration. So the rules that we've got then, if it's to do with expenses, so if you've incurred a service, if it's a service, not expenses, because they're all expenses. If it's a service that you've incurred, you know, let's say you've had some accountancy work or consultancy work and you've been charged VAT, you can claim it back provided it's for the business. So the service was for the business purposes and it's in the last 6 months prior to registration. Okay. If it's to do with stock or assets, so it's things that you've bought, then again, it must be to do with the business. And that can be for the last 4 years. So you've got a longer period of time, but you must still have the asset or the stock. So if you were charged, say, some VAT on a machine, then you can claim that back as long as you've still got that machine. If it's to do with stock, then you must still have the stock in the warehouse. So if you bought it and sold it, well, it's gone now, it's irrelevant. So it must be for business use. You've acquired it in the last 4 years, you've got all the documentation for it, and you've still got it in stock. And in that instance, then you'll be able to claim it back in your first VAT return.